presentation of Financial Crisis Recovery.
Foreclosure, short sales, bankruptcy, credit card debt, job loss, depreciating home values, money management. Peace of mind when it comes to your finances seems completely out of reach under current conditions, but there is a way to achieve it. For the next 60 minutes, you're going to find out how to cover your assets. Cover your assets. Now, here's nationally renowned speaker and expert on getting you on the path to financial strength, Todd Rooker.
Good morning and welcome back. Jason Walgrave here filling in for Todd Rooker. This is Cover Your Assets. Also in studio, Wade Abid with Pathway Funding and Mike Overson with Waterstone Mortgage. We are live and we're going to be taking your calls all morning long at 651-646-8255 is the call number. Again, 651-646-8255. One of the big things we're going to be talking about today is we have a lot of folks that come to us. They've gone through a short sale, foreclosure, or bankruptcy situation. There are options out there. Pathway Funding has the options available for some folks where you can go right into and build a brand new house right out of one of those situations, and we're going to talk more about that, how that's done and what that means. If you're new to the show, this is Todd Rooker's new show, Cover Your Assets. Best way to get a hold of Todd is, of course, on his website, coveryourassets21.com. Again, that's coveryourassets21.com. Todd's got a couple different websites. Also, if you're interested in the Financial Crisis Bible, which is at financialcrisisbible.com. This is a free download for people who are already facing a financial crisis or who could be in the near future being in a situation where you have a financial hardship coming up. financialcrisisbible.com. Check it out. And, of course, Todd's phone number is 763-559-3800. Give him a call anytime at 763-559-3800. We are going to open up the phone lines, encourage callers this morning. 651-646-8255 is the call number to the studio. We'd love to hear from you. We're going to be here all hour long taking your calls and questions. Wade, good to see you again.
Good to see you, Jason. Good morning. And, it's a pleasure to be on Todd's show, and I'm glad he called.
I am too. It's an honor to take over, and Todd's out for the weekend, but I know he's listening. Todd, we will hopefully make you proud.
Indeed.
Todd, Wade, tell us a little bit about Pathway Funding. What is it, and how are we helping folks get into homes?
Well, that's a great question, and it's one that I really take great pride and pleasure in offering. Today, we've gone through this crisis from 2008 onward, and we've seen the depreciation of things. We've seen our recession that we've gone through and still going through, really. We've had some job loss, and then the normal things that happen, unfortunately, in life, divorce, death. There becomes a time when these crises have to be managed a certain way. We have an ability. We had to develop a product that could handle that, because here's what happened. And I think our friend Mike can also address this, is 5 years ago, there was a box that was open, and that box was called, I can get a mortgage and buy a home. Well, with the crisis and the banking crisis, what happened was that box shrunk and it got a lot smaller. And so there's a lot of people that have gone through these single events that have had things happen to their credit, loss of income, change in family dynamics, and they no longer fit in that box, but they have the ability to own a home. They can afford to own a home, but they have some dings and dents from this event that happened. When we sat down with our hedge fund group, we decided we have to find a place in the market for these people, because that market space is really growing and growing. How can we ensure that? Well, we developed an idea that if we can hope and help stabilize markets, particular markets, by building new homes, we have a better chance of maintaining values, because we still see decline in values. If we put people into an analysis and look at really what happened in this event, we're not talking about habitual 20-year pattern people that just for some reason can't get their finances straight, but the event situation. If we can look at that and then we compare it to our matrix and the guidelines that exist in the conventional world that Mike deals with, we can get them down this pathway and prepare them for a conventional, traditional type of mortgage. In our case, we start off by looking at them today, because there's nobody out there right now looking at them today saying, yeah, you can afford a home.
Right.
Yeah, you can do these things. Yes, we can see your credit repaired and permanently repaired. That space has grown so big, and it's not just somebody that went through foreclosure. It was forced short sales. It was all sorts of things. But today they can come in, build a beautiful new home. They can afford it. They can pick it where they want to have it. It could be in the district where their kids go to school. They have to qualify. They have to have down payment. Their credit's monitored. We require reserves. We report to the credit bureaus. We're in essence helping them along that path to build them, so we can turn them over to Mike at Waterstone or somebody like that. It's a really unique program. There's not really anything out there in the market space like that. It's a non-mortgage product, but it really works very similar to one.
Well, I think what you guys do well is you don't look at each individual as just a credit score, and a lot of times the banks will do that, and it's a bigger picture than that. So what you're talking about is people have the opportunity to build a brand new home right now today, even if they went through one of those events. And although Mike's got a Path to Buy program that 2, 3, 4 years can get you into conventional product, at Pathway Funding and Regal Homes, you have with usually about 20% down, and like you said, you have to qualify. You guys are going to help folks get into a program that in 2 years you can refinance into a conventional or Fannie or Freddie back product.
Very, very, very correct. One of the things, and I've used this before, is people aren't just a credit score, and we rely so much, whether it be insurance, whether it be life insurance, car insurance, mortgages, credit cards, loans of sort. Everybody's a credit score. Well, we look at it a little deeper than that. They're not just a credit score. They are a working, functioning person, family that can actually do this. Okay? And we have a way to get them where they need to go. And we want to promote home ownership. We want the American dream to still be attainable. And there's a trend that's just not appealing to me anymore. I've had 20 years of banking experience. I've run many companies, mortgage companies, correspondent direct lenders. I've been in that world. So what's really helpful for us, because we really want to advocate on the borrower's behalf, but we also want to make sure that there is as best that can be done, a series of risk mitigating factors to make sure they can come to the end. Again, knowing what we call in our industry MRI guides, or what the guidelines for Fannie, Freddie, FHA, VA, USDA might be, we look at them again today as a person. And we correct what needs to happen. So when Mike looks at them 3 years from now, we know what that looks like. And so our analysis is based on that end goal. We get them refinanced through one of our partners like Mike or any one of the lenders that are out there, and there's plenty of good lenders out there. But there's no place today for that market space. Pathway Funding, our soft landing program, is that place.
Well, I think what's interesting about what you guys do, which is a little bit different than your traditional bank, is the process from beginning to end benefits the consumer as much as the funding entity. So you're not just about let's eliminate or reduce the risk as much as possible. No, let's see if we can get these folks in the best possible situation or position in 2 years. And so it's just an incredible product, and I think it's helping a lot of people out.
It really is, and we have a lot of people in that program right now. And the thing that we make sure of, and this is one of the things that's very important for anybody, whether they're buying conventional or coming through Pathway Funding with our non-mortgage product, is that the analysis is done on the reasonability to afford. Don't buy too much house. We do a very detailed analysis, not just on this credit profile and what it'll take to get there, but then we look at their situation from a financial perspective. And we will not go to a ratio point where some lenders will, because we know at the end of the day we're setting them up for probably a problem. If they have any hiccup, so to speak, that's significant, it may be something they can't handle. And so we try to get that part taken care of as well. And to your other point, we are here for the consumer. We are here to build houses as well. We are here to lend money, and we are here as a profit business. But we wanted something for the consumer that just has no place to go and a way back.
Phone lines are open at 651-646-8255. This is Cover Your Assets, a new show. Todd Rooker's new show on AM 1500, KSTP Radio. The phone lines are open, and we'd love to hear from you at 651-646-8255. Give us a call this morning. We're talking about Pathway Funding, Regal Homes, how to get into a brand new home straight out of foreclosure, bankruptcy, or short sale without having to wait. Give us a call, 651-646-8255. We're going to go to the phone lines. Jeff, good morning. How can we help you?
Yes, I'm with Citicorp, that I'm trying to get about an 8%. And I'm trying to get a lower interest rate. But they're saying I wasn't with Freddie Mac or Fannie Mae, that I can't. They won't help me. So can I get that lower?
Are you upside down on the house, Jeff?
No, my payments are right up to stuff.
How much do you owe on the home?
126.
And how much do you think it's worth?
Well, they're saying it's worth probably about 80.
Okay.
So Jeff, in your particular situation, being that your loan balance is higher than what your home is worth, there's only a few products out there, mortgage products, that will allow you to refinance at the lower rates because you're upside down. The conventional product is called the HARP 2 product, and that's for any loan that is owned by Fannie or Freddie. The other product that you could go on to too would be FHA. But the only thing with these loan products is that you currently have to have one of those loans in order to refinance onto one of those loans. So if you currently don't have an FHA loan, or if your loan is currently not owned by Fannie Mae or Freddie Mac, the unfortunate